My fellow traders, you probably wonder why the US-China trade war news and headlines and the actual phase one of the deal being agreed, why it has not really sent the equities higher. We've seen the initial move, initial flows coming in after Trump's tweet on Thursday, right? So the event was already priced in pretty much. Now, one component is that, right? So we can't really go much higher given the fact that, and this is number two, there is still a lot of uncertainty, okay? Investors are cautious because things could turn bad again. We haven't got anything signed off on a paper. Plus, even if we did, it's just a sign-off. It is really de-escalation, but considering the US demands, okay, the question that arises now is China going to keep its end in the clear? I mean, 40 billion worth of purchases for soya beans. This is way above anything that the Chinese have purchased before, okay, record highs. And it's going to be very hard to achieve that, right? So although we have a de-escalation because of potential sign-off in January, the question is, are the concessions really realistic? Okay. Now, with that being said, we've had the Nasdaq rising higher because as a technology index, of course, that will be the first to be supported by these news. And of course, that doesn't mean that the others didn't, the S&P and the Dow Jones, but the Nasdaq remains high, okay, and very close to the all-time high. And that's why I wanted to explore that one today. I want to show you that. Let's just go on the 2-hour chart. Okay, I want to show that. Yeah, I still think that we are really we're still moving to the upside. Okay, although everybody has been talking about recession fears and about a final, we'll start seeing the correction now, and and there will be a very big dip. I still see this moving higher. Okay, and maybe even in 2020 that will continue to the upside. Okay, given of course Fed's guidance, as well as the fact that interest rates in general remain low compared, of course, to previous years. Now, if we had this sign-off also in January, that is also supportive. The only thing that really keeps me in the zone, let's just say, at least for the time being, and more specifically this week, we have the Trump impeachment vote. Okay, Trump was charged with abusing his power and also obstructing Congress, and we have to see what's happening in this week's vote. Now, historically speaking, when there was an impeachment before in the US, we've seen the equities going lower. So if we see an impeachment required going through and Mr. President losing the vote, then we are likely to see a correction down here, right? It could be like the case 1, 2, 3, 4, and 5. So most likely going to see something like that, okay? Down to the 800s, 8,000, and then a move to the upside, given, of course, there is no other risks from other potential geopolitical and also economic headlines and events, if you may. Now, the question is, where are we going up to? Well, if we use simply our Fibonacci's, we'll be able to identify a very nice, this is the Fibonacci extension, a very nice level over here that has been crossed now. We've broken that level. The next coming up is the 88.95, right? Now, if we go in a smaller degree, in the minor degree, and we pull our Fibonacci extension waves 1 and 2, we're going to see the 84.15, which is now again crushed above. It's broken, either temporarily or a force break, or continue higher. And then the next one is the 90.70, right? So we can expect wave 3 now, with 4 down. We can expect wave 5 to actually end anywhere above the current price and up to the 90.70 or so. Then 4 and 5 to complete wave 3 of this potential impulse move to the upsides, okay? Now, the US index, of course, has seen a good decline. I'll be honest, I didn't touch the US index at all. My view remains unchanged and has been the case actually over the past few weeks. We moved exactly as we expected. We were talking about this being wave 4 and then we're expecting a wave 5. We've done 1, 2, it looks like this is 3 and then 4 and 5. Okay, so I'm still expecting this to move a little bit lower. The thing is, because this impulsive move to the downside, it has some weird pattern over here, right? It looks like to me that we are going into a minor, we are into the minor, so we're going into a minute. So we can expect that we can expect to see a correction and then another three-way move to the downside. If wave 1, wave 2, wave 1, wave 2, then 3. If 3 becomes another 3, then most likely we're going to see just another move to the downside that is going to create a false break. So I would expect wave 5 to end anywhere between 96.34 and 95.82. And after that, of course, then most likely going to see wave 2 and correction up to probably the 50% of the wave 4-5, which is around 97.50 or so, and then continue to the downside.